In this video, we're going to review the trades that we had today. Today is Wednesday. It is February 19th. So the total net profit pips, total net pips here is 120 so far as of this moment. I do have one more trade that's opened here on the pound dollar. So I'm going to review each one of these trades, and we'll talk about what it takes to actually make 100 pips a day. The first thing that I want to say about that is that you can't make 100 pips every day. I don't make 100 pips every day. It's not possible. On good days like this, it's certainly possible. It's actually possible to make a lot more. There were several other currency pairs that I did not trade, and I could have traded that and could have ended up with maybe over another 100 pips added to the 120. So we could be at 220, 250. It is very, very possible. But you have to be prepared and realize that there's only going to be certain days out of the month that's going to provide you with opportunities like this, or certain cycles in a annual time frame that would generate results like that. And the reason that I start here with this chart is we're looking at the dollar index. This is the dollar index, and this is the daily time frame. And we talked about this last night with last night's update video. And I talked about the trend and the analysis and how far this one is likely to go. And I mentioned here at a couple of different locations, even last week, again, this is a daily time frame, that it doesn't look likely to reverse just yet. This thing, price could certainly go a lot further, and it's taken out this high from October 1st. It was an area of resistance to be paying attention to see how price reacts to it. And it is possible that by the end of today, this daily candle, will actually close below that high. But at this point, we want to use this as a gauge. Identifying key or specific, very important resistance and support levels like this one here, October 1st, that high on the daily time frame. Sometimes that can give us an idea of or help us determine when we should stop trading, when things are likely to go sideways and we should get out of the trade, or should we hold on for more. So again, it doesn't look like it's going to stop just yet. And I wouldn't be looking for areas to just start selling off the dollar and trading the opposite with those some of the majors, some of the Forex majors. So again, keep that in mind. This doesn't have to stop moving higher just because it's at an area of resistance. We need to continue to watch this and manage this. I need more confirmation than just one or a tag of resistance. You'll see a lot of people that try to pick tops and bottoms, and they immediately sell at resistance and immediately sell at support. And sometimes it works. It's okay. Sometimes it'll work. You can see how it would have worked out just fine right here. This is October 18th. This is November 1st. There are times when it does work and it's okay. But just the same, here's an area of resistance, and it blew right through that area of resistance about a week and a half ago, and it's just been moving higher ever since. So we have to be aware of those possibilities. But again, use them as a gauge. We need more confirmation. That's how I look at it. So let's take a look at some of the trades that I executed today. So actually, the whole thing started today with the pound dollar and this 30-minute breakout strategy. So a lot of you have expressed quite a bit of interest in this 30-minute London breakout strategy that I use. First of all, I'd like to say that I didn't develop this method. It's just a trading strategy that I started, I started to apply when I was trading futures. Back in 2001, I started trading futures, the E-mini S&P, and I would look at the first 30-minute bar and then wait for a breakout of that range. And it was a pretty good setup for me. I also experienced some losses in the beginning. This was back in 2001. So one of the things I had to start doing was paying attention to when those losses were, when I was experiencing the losses, what was the market environment like? Was there ways, and I was asking myself these questions like, was there ways, or is there a way that I can determine that the conditions for today would likely create a head fake where I would lose on a trade? So I just kept using that strategy. I didn't stop. I kept using it and kept working with it, kept testing it in different environments. And eventually I was able to learn how to read the markets and identify when certain conditions were optimum for that particular strategy to be used, and then when it wasn't optimum, the market just wasn't working right, so I just stay away from it. And it helps me eliminate a lot of the failed trades that I could normally experience if I wasn't accepting some of these these realities about learning a trading system so well. And I say this very often: learn a trading system so well, that's your edge, that you know when to use it, when not to use it, and you stay away when it's not working. When you know that there's an increased probability of a failed trade, just stay out of it. You don't need to execute a trade. A lot of people will do that and they accept the loss and they say, okay, well, I'm going to do okay. My trading system says that, I still have a 60% win, 40% loss. Can you improve that? That's what I did when I developed my trading system. I was constantly looking for ways to improve it. So this was the London breakout strategy right here. So this candle, sorry about that. This candle right here is the 8 o'clock candle. That's the London breakout. And you can see where it gives me the opportunity to identify. Let me go ahead and open this up. I'm going to open this up and then put it right in the middle of the screen so you can see what's going on. This is the London breakout. This is the first 30-minute bar at the London Open. That's how I set this whole strategy up. I wait for the first 30-minute bar at the London Open. You have to be aware of when the London market opens. It's very important that your timing is right with that. And the reason I'm being really specific about that is that I made a mistake years ago. I didn't take into consideration the daylight savings time. So here in the United States, I'm in California, the daylight savings time is at a different time than it takes place in overseas. So I was off. My timing was off, and then my breakout trades were failing. So you have to be aware of when the London market opens, and then watch that 30-minute bar. Watch that first 30-minute bar. So once that candle's closed, I then know where my high is, and I know where my low is. And I wait for price to then take out the high or the low by 1.5 pips. That's my entry. So price has to take out the low by 1.5 pips. So in this case, I had an entry of 1.2997, and I use a 20 pip target from the entry. It is not based, and I got this question the other day, do you take into consideration the pip spread? So you'll see right here with this broker, it's about a pip and a half, 2 points. I don't care about the spread. That's up to me to find a broker that gives me relatively tight spreads. That's a different situation. When I'm looking at a trade though, and I'm trading to a specific level on the charts, I always follow what I see here on the charts, not the numbers that I see in my profit and loss for my trading platform. So in other words, if it's a 20 pip target from the entry to the first target, I don't add another 2 pips because I'm using a 2 pip spread to insist that I get 20 pips. Now, obviously, sometimes it's going to go a little bit further. Here it went a few pips further than that, but I don't look at it that way. My plan is that I get in at a specific location and I have a very specific take profit level. I don't mess around. And one of the things that you can fall into, this is a trap that I fell into quite a bit. Let's say, for example, today it went to the 20 pip target and I earned 20 pips on this trade, approximately, not taking into consideration the spread. And then the next time I would see the trade and it would just keep going and going and going, like yesterday's trade. Remember yesterday's trade, it hit both targets. So here was the first 30-minute bar. There was the entry. There's the first target at 20 pips, and there's the second target for an additional 20 pips. Sometimes it'll hit the second target, and sometimes, like today, it won't. It'll just hit the first target and that's it. So don't fall into that false sense of security where you think, well, the last couple of times it's hit the second targets, so this time I'm going to hold too long. Right? You're going to hold for the second target. And it doesn't do that. Don't have that mindset. Your plan is the first 20 pips. Anything after that is bonus money. So you would set the trade, you would scale out and then set the second half of the trade at a break-even stop. So in this case, it was 20 pips profit here. That's it. And then it reversed and went right back up. I stayed away from trading this morning. It really wasn't a setup that I would consider trading. This is just chop. This is just, a move down, a move right back up shortly after. So that's where everything started this morning. And then I got a continuation breakout trade on this pair later. So let me show you that. That's what we were looking at here just a moment. So now I've got to go to a different chart. This is my breakout page. And this is the pound dollar. So I use a strategy called the continuation breakout trade. Some of you that are already in the coaching program, if you go inside of the online course, there's a module for this strategy. I teach how to use it on a 1 hour time frame, a 4 hour chart, and a daily time frame. It's extremely profitable, very, very reliable. It's profitable or reliable 90 to 95% of the time, accurate. It's going to be a winning trade if you execute correctly. It really comes down to knowing where the right high or low of consolidation is going to generate the breakout and the trending move that develops afterwards. And you can see it right here. That happened this morning. So here's my breakout. This is my support low at 1.2970. That candle closes below support. That's my continuation sell signal candle right there. That's not the entry. It's just the sell signal candle. I need a 3-pip entry on this trade. I'm not going to spend a lot of time right now. I'm trying to get through this update as quick as possible because I still have a couple of open trades with some coaching students, so I'm going to get back into that session with them. But I just want to show you here, if you're interested in that 3-pip entry, what it means, what it looks like, how you get into the trade, what time frames are necessary, all of that information is in that module, the continuation breakout trade module in the online course. So I need a 3-pip entry. I scale out at the first 20 pips. So my entry here was 1.2946. And here I scale out at 1.2926. This candle went as low as 22, or actually 23. This one reads 22.9. So I scale out at the first 20 pips. The final target is 55 pips. So the profit on this trade when it hits 1.2995 is approximately 55 pips on this trade. So it's a 55 pip profit on this continuation breakout trade on this time frame. This is a 1-hour chart. So I can use the same basic strategy on a 4-hour and a daily time frame. Daily time frame, 4-hour charts, obviously it's going to be a slightly different take profit level. It's an extremely powerful trade. Now this was not the only breakout trade that I had today. So this is already, as of this point, I mentioned that we are at 120 pips profit so far. When this finally hits that target, I'll incorporate the additional pippage that you see here when it hits that final target. So far for the month of February, we have profited 738 pips. I haven't had any losses yet. It doesn't mean that I won't have losses. I do have losses on occasion. But the fact that I'm patient, I wait for my trades to come to me. I stalk my trades. I wait and I wait and I wait as long as it takes. And I know it frustrates a lot of my coaching students when they're first, sort of incorporating, my trading strategies, my style, my philosophies, my methods. A lot of them, some day traders, they want a lot of activity. They want to scalp. Maybe they're still into that scalping mode. I initially scalped when I first started trading, but it's not necessary. I will wait 1 or 2 or 3 sessions and then wait for a breakout like this. Because you can see here, the only trades that I have on the pound dollar is that London breakout strategy for the most part. And that's when the London market opens. And then for the rest of the day, I'm really not doing anything. I don't need to trade here. This is about 12, 13 hours of just sideways nothing. There's nothing to do here. And a lot of traders will sit there and look at this and try to pick an opportunity and fire off trades that don't go anywhere. There's no reason to do that. I just wait and then I get another opportunity. I know the market's going to give me my trade. I just have to wait for it. So 738 pips profit so far for the month of February. And it's only the 19th. We still have another week and a half to go. So we're doing really well here. Again, as I mentioned, this was not the only breakout trade. The other breakout trade was right here on the dollar yen. Now, for those of you who've been watching my trades or my analysis, coaching students specifically, at the end of every night, I do a homework session. And I show you my homework. I show you my trade plan on this coaching session, this homework session. And for the last few months, just about every night, at the end of the night, I say that I'm not going to be trading the dollar yen. And I'll repeat that over and over again because there really wasn't anything for me to do. And I'll show you what that looks like here on this chart. So this is the daily time frame again. We're looking at trading view. I'm going to go to the dollar yen. And the dollar yen, prior to today's candle, there really wasn't anything for me to do. You can see here about 7 or 8 days of just sideways consolidation. And then again, it happens over here. There's a few weeks in here where we get a little trending move. And this was back in December. There was about a week and a half. I didn't have any trades. There was nothing for me to do. The trading ranges were like 27 pips, 28 pips, 32 pips for the high or the low for the entire day. That's not going to provide me much of an opportunity to earn profits. If I'm going to get into a trade, I need to see that the market, the rest of the market's participating. There's a lot of momentum, a lot of volume. Otherwise, price isn't going to move. It's not going to move very far. And there's no reason for me to put on a trade and put on a full-size position with my capital and then just watch it just go sideways for 7 or 8 days. That's just exhausting. There's no reason to do it. You can just simply wait when you can identify the conditions. And here's my trade. This is an excellent trade. I've been waiting for this trade for months. And all I have to do is wait. I stay out of it. I don't get chopped up trying to scalp and buy and sell off of support and resistance and give back lots of profits. I just simply wait. There's other opportunities, as I pointed out, with the London breakout strategy. I'm always making money, or there's always an opportunity to make money if I just wait for it. When I say always an opportunity, it doesn't mean that I'm getting one every minute or every hour. So I do have to wait, but it's just a matter of waiting for it to come to me, or I stock for that trade, and then I get my opportunity. So this is actually going to set up a solid trade at the end of the day. You can see this is the daily time frame. We've got about 2.5 more hours, maybe 2 hours, 10 minutes here left on this candle. So this is really paying off. This is actually part of what me and my coaching students were trading back in the late summer and early fall. These breakouts and reversals that we were identifying, there was a bounce off of the 2018 low on the weekly chart back in September, and that put us in this direction here to the upside. This goes all the way back to right here. This is that August, there's August 29th here. And then there was a reversal here. This reversal in this range right here was a bounce off of the 2018 low. And it's just been in an uptrend ever since. It just took a really long time. This was all through October, November, December, the trade war issue with China, waiting for a deal. All of that had an impact on why price was moving around like this. Now we're getting past a lot of that. So this is probably going to provide me more opportunities to trade this higher. However, on the 1 hour chart, this is my continuation breakout trade. So let me show you that breakout trade here. I'm going to open this up. We're going to go to the actual breakout. I have opened up things quite a bit here. You can see it. So this was my range of consolidation. That's that high, the 110.12 or 13 area. Here's my low for the week. This dotted line right here separates the beginning and the end of one week, the beginning of a new week. So this is this week's here, this price action so far. Here's my continuation breakout trade. Right here is where it develops. This is my entry at 110.21. There's my 55 pip take profit level, 110.75. And you can see it went a lot further. I can certainly trail this once I lock in profits there. Again, this paid 55 pips. So between this one here and the pound dollar and the pound dollar London breakout strategy, also trading the pound dollar, the pound yen in the same direction as the pound dollar this morning, has resulted in the 120 pips, 738 pips so far for the month of February. It can be done. You can do this. But the thing that I really want to stress, and I really want you to prepare for, is that tomorrow may not look like this. You might get really excited looking at my results today and what some of my coaching students, I had one coaching student this morning, traded executed these trades with me this morning, and he earned over $2,780 today. So again, it's exciting to see it happen today, but it may not happen tomorrow. Things might go sideways tomorrow. Things might flatten out, and you may want to participate and join in. All I'm saying here is that keep this in mind. You're going to get opportunities like this, but you don't get them every day. We all know that. The market's only going to provide certain days out of the month and certain cycles out of the year where you're going to get extended rallies that go on for 7, 8, 9, 10 days, maybe even longer than that. And then with breakouts like this, all it is just a matter of waiting for it and staying out of the choppy, low volume, low participation market environments. That's when it's going to be the hardest for you to make profits. You're likely to grind away at your trading account and give back profits when there's low volume, low participation, sideways movement. It's just not covering, price isn't moving very far. It's not covering a great distance in order for you to profit. So there's no reason for you to trade it, and you have to stay out of it. And then looking back at the end of the month, you're going to see that you were up 738 pips. That's not bad. And I haven't had too many trades. Me and my coaching students, we haven't had that many trades this month. But we're up 738 pips so far with no losses so far. Now, again, I expect a loss eventually, but it's going to be easy to earn back the loss because I wait. I wait for the opportunity to get the next trade signal, confirm the trade signal, execute, and then take profits where I'm supposed to. And then repeat and repeat over and over again. So the strategies that I teach, they can be used on the 1 hour time frame for day trading. I also have a couple of strategies on the 30-minute, including the London breakout strategy. And then I have strategies for the 4 hour chart, the 2 hour chart, and the daily time frames. So for those of you who are limited on time, you can't sit and day trade all day long, you can certainly use some of these strategies to trade off of the daily and the 4 hour chart, which really slows things down. And you have a lot of time to identify and confirm a trade. for example, if you're trading off the daily time frame, I've got to wait until the end of the day for another opportunity on this one. So this one's still an open live candle, and I don't recommend executing trades when you're waiting for a signal and the candle's still open. Just wait until the candle closes relative to the time frame that you're trading off of, and you're probably going to get a much better signal. So that's how you can earn 100 pips or more. And again, this certainly could have provided me with more had I traded other currency pairs, because my setup was available on other currency pairs. It was a very busy day today, and I was working with coaching students, so I had to keep it pretty limited to just the 6 majors that I was trading this morning. But for those of you who want to know how to do this, to learn how to do this, if you have the time, and some of this can be automated. In my coaching program, I teach how to automate some of this so that even if you are at work and you want to maximize every opportunity, you can set up some of these trade systems and these templates to fire off a signal so that it warns you when you get a signal, and then you just look at it and confirm it. And you can do it from your phone, you can do it from your laptop. You just take a moment, confirm the trade, and then execute the trade. And you can apply this to, in the past, I've traded up to 16 different currency pairs. So there are some days that you can make 300, 400 pips in a single day. And I'm not talking about double counting. In none of these trades am I talking about double counting. This is from 110.21 to 110.77. I'm not double counting when I say there's approximately 55 pips here. So I know a lot of other companies out there, a lot of other guys on Facebook and all over the place, they double count. If they have like 10 lots on a trade and they earn 10 pips, they count it as a 100 pip gain. I don't like doing that. I think that it's sort of misleading. So everything that I talk about here is from the entry to the final target. And when I say 120 pips, it's not because we have multiple lots on a trade. Certainly we have multiple lots. If you can afford it, I would recommend doing so. You want to put on a full-size position on a day like this. This is the day that you step up with confidence and you earn a lot of, or the bulk of your profits for the month. And then again, like I said, it's possible that tomorrow might be a pretty slow, flat, sideways moving day, and I might not see these opportunities tomorrow. And that's why it's critical that you learn to identify when the market's breaking out like this, and that you have that confirmation and the confidence to step up, execute a full-size position, and you're going to earn the bulk of your profits today. And maybe another day next week, or maybe another day later this week. Whatever the case is, the market's only going to give us certain opportunities to do that. You've got to be ready and you've got to be prepared. So if you have any questions about my coaching program, go ahead and drop the comments just below this video. I do have a few seats available in the coaching program, and I'd love to have you in there. If you've got any questions about it, just let me know, and I'd be more than happy to answer your questions.